right, good late morning. Running late here today, guys, and a number of things going on. Let's jump right into CONY. What a day yesterday. I mean, BTC flew, Misty flew, CONY went up, but not without problems. So let's jump into it. So what happened to coin? Coin went from 203 to almost 220, 219.91, was up 8.3%. CONY was only up a little more than half of that because it was capped, right? We ran right by all of our strikes, and that hurt us. And also, they rolled the synthetic. So rather than pull the sheet over, I'll just go show you. So we finally got out of that ugly, nasty 260 that we had at one point 135 million loss on. So we got it down to 104 with the height, right, by moving up. And we took that loss. And so now we're done with the 260. We rolled over to a 220. And when we wrote that position, we wrote it earlier in the day. It closed pretty even, so we have a small loss. But when we wrote it, we gained 9 more million. So the 104 minus 9, right, took us back to like 95. We had like a 13 or something. So if we go over and look at our payments tab, I'm going to go over this in detail at the end. But now we have an 81 million loss. It's not like we didn't know this was coming, right? Now let's talk about the weeklies though. That's my concern right now. And we have a chance to salvage those. Possible. Okay, so let's go back to May and finish. So we didn't have any other positions, and we rolled into a 220, right? So you see this big cash drop, right? So it was, 86 million change, right, in the value of the fund because we had to take that big loss. So what did the 220? I showed you that one. So we got 9. So now we're in a position though at this 219, right, where we're right at this number, but I'm hoping we go back to 10. So if we go back to 210, it's going to save us 11 or 12 million, and I'll explain that right now. And that's where we want to save this. We've got 7 million sitting of this 13 that we've already collected, right? We've already got an ugly loss here, right? But we've got a 20, we've got the potential for a lot of gain, but we don't want to lose this. So what has to happen so we don't lose that? Well, let's go to the weekly. Actually, holdings will show it better, and then I'll flip over there. So the bulk of our contracts are at 212, by far, right? 95% of the 7 million, or 90%, right, is the 6.3 million is right here. Now, what would that cost us today? That would cost us, because we're at 220 now, I just checked in the market, it's around 218 as I record this. So that's better than the 220, 219.9 that we closed at. So that's almost all in the premium, right? At 220, we're 7.5 above. So if it stayed that way on Friday, this would be 7.5. So it would be around 17 million, right? We only collected 6.2, so we don't want to buy it back at 17, right? Otherwise, these are minuscule in comparison, right? I mean, this one we collected 316 and we'd have to pay 1.1. So the last thing we want to do is run to 230 or 240 right now, which I don't think we are. We would make it on the synthetic, but the thing about synthetics, to remind you guys, right, even if this was a gain, they'll loan money when it comes to payment. But on the synthetic, since they're out 2 months, we only have one cycle of collecting typically during the month to get our paycheck, our piggy bank full in a synthetic, right? And we just rolled and it happened to be a big loss, right? So we want to keep as much of this as we can. That's the net, right? This isn't the worst thing that ever happened. I mean, look, we had a $72 million loss in January, but we came and we made 23 on the weeklies because this was, running. And they paid us 2/3 of it, right? So you have all kinds of different scenarios. This one we made 88 million, right? This is the only one that's kind of similar that I've tracked, right? And that one had a gain, so that's why I don't want to see us this week. If we had to buy back and we took a $20 million loss, now we have a $7 million loss here. We got no money to pay. Would they pay us something? Yeah. If we did that horrible and didn't collect any more, we'd probably get 50%, 50 cents, right? But I'm optimistic we get to $1. And even if we lose some of this. So the best scenario is we get this guy down to the 212.50. If we get it to 210, that's 21,300 out of 22,400, right? So we're really cooking. If that happens, we really solve that. So let me show you that in detail. So that's what we want to happen. We want to get to 210 and stay there through Friday. Then we can run next week. And that takes these right back to a 6.2 and to a 300,000. So we get 6.5 of the 7 million right there. We're already going to get these, right? But they're nothing. They're like 250,000, almost 300,000 here. This is 300,000 alone. This is 150. I don't see us getting down to 217 and staying, but I can see us dropping back half of that. I didn't start. I had some technical problems also with my computer, so I don't have Thinkorswim running. But I'll start it in a minute. Otherwise, I was going to show you. Pre-market was showing around 218 in coin. All right, so let's get to anything else. So there's the weeklies, right? How far we are behind. These don't matter that we're going to win those, maybe, because they're so small amount of money, right? So we're up 21.96 and 219. I talked about that. The chart doesn't really look huge. I updated Misty. I'm going to do that next, right? But we're up here, and we ultimately want to break out of that wedge, but I have no problem with us going to 210 or 212. So if you want to hope for something, hope we get to 210 or 212. Even if it's during the day on Friday, let them buy it back for 50 cents or something, right? And so let's root for that. Not much else to tell you. So all they did was roll out of the 260, get rid of it, which I was hoping they would do, and roll into the 220 and get us pretty well positioned going forward, right? We closed at 21.96. Fair value was 21.94. No new shares added, which means there weren't 25,000. I know I bought some more yesterday. I tried to buy some Misty and I missed it. Say that really fast. Misty. You got to have fun with this. You can't take it too serious. It'll drive you just crazy. Sometimes having just so much knowledge is dangerous. But I can't wait to talk to you guys about Misty and show you how good my charting. I wasn't necessarily expecting it yesterday, but I knew when it broke it was going to run. So we looked at that. Let's talk about the payments again. So what we want to do is hang on to this, right? This will eventually take care of itself. We'll start winning on that 220. So we've got all the way to 719. So at the end of the day, this thing closed with a slight loss because it's more even. But when we wrote it and we bought it, we were able to sell this for a lot more. And then it moved up in the day, right? So we got a $9 million gain. But we don't, as we start to write when we're over this price, then it's harder to make money on the synthetic. That's why we want to keep these weeklies doing well. Once we clear the slate tomorrow, if we can get back to 212, we're looking pretty good. So that's all I got for you guys there. Let's jump over to Misty. So there was a lot of excitement on Misty, I'll say. So what did Misty do? Misty climbed to 1503 from 1297, right? It's up 206 points, 15.86. We were capped, man. We were really capped. So we went up to 31.77. I had an order in for like 31.38 all day. I think it went down to 31.42 or 31.50. I want more Misty because I know where it's going. So one of the things I wanted to tell you guys, especially for you smarter guys who understand, hedging. So one of the things you can do is, if I told everybody, look, you own Misty, there's days when it runs 15%, you're not going to make as much in Mr. Well, not everybody can go out and buy a $1,500 stock, right? So it's difficult to get in, and you can't get enough to write options on, right? You need to spend $150,300 just to be able to write one contract, right? So I know how hard it is. I've written them on coin when it's a 230 stock, right? So I know what it requires. So there are some ETFs, and I'm going to start posting more of this and sharing with you guys, where there was one CRPT, I think, that owns 17% of the ETF is in Misty. And it was up yesterday 12%, and the rest is in some cryptos and other things. I think it's CRPT. I'll find it. My system crashed when I was in the middle of recording before, so I lost that whole record. That's why I'm late. And so I had all those windows open and everything, and so I don't have that for you guys. But I want you to have some things that will allow you to, if you want to go short, go short. Some things that, if I tell you, look, it's not going to do as well, because just trading in and out, I don't think is the way to go. But sometimes buying a hedge, right? Or saying, hey, I own the CRFT and I got a 12% kicker because I didn't get all of my 15 in Misty. Now, it doesn't pay an income, and the reason we're in these funds is because they pay a great income. So anyway, that's my rant on that. And I'll do that for coin. I'll do that for Mr. and Misty. So I got a lot of that info. I just need to share it. And then I mentioned this weekend, gold and silver very close to where the miners are going to take off. Gold and silver are already breaking out big time. Silver is going to get going before long. And it really runs when it moves. So I want you guys to own some quality gold and silver mining stocks when they're set to move. I don't want you to own them because they've been so undervalued and so hated. I'm telling you, that sector is going to outperform all the AI, all the FOMO, all the NASDAQ, all the Dow. It's not dividend focused, but some of the stocks are dividend focused, right? So when you can get capital appreciation and dividend, why not? I like to get you in sectors that I see really moving. Okay, let's finish talking about Misty. So no trades in it. Let's go take a look at the weeklies. This is damage, guys. Look at this. We ran to 1503. This is trading at 1518, right? CONY at least came back from 220 or coin to 218. Mr. a few minutes ago was up at 1518. So what's the situation here? We're in better shape because we didn't have to roll a synthetic that hurt us. We're in a 1300. And look at this game. By us flying up to 1500, this thing flew up, this got reduced tremendously, and if we just stay above 13, it goes to 0, so we gain another 14 million. But the problem is this happens over time. So right now we're 22.6 million gain on paper in our 1300. Well, we're losing 22 million in our weekly, right? We collected 2.8. Look at how far these are. 1280 for the bulk. We're at 15. That means we got to buy that thing back just on price alone with no time premium at 220. So with time premium, I think it's around 225. Let me show you. Okay. So we collected 2.7 of the 2.8. We would have to buy it back if we close. Now, granted, there's only 220 in the difference in the current price. Well, I take it back. That would be 223. So there's only $2 in time premium. So 20.5 is what we'd have to buy it back if we end up at 1503. If we run to 1600, we'll spend a fortune, but we'll make it all over on the synthetic, right? That's the yin and yang that I talk about. Moderation is the key here, where you get 2 and 3% increases, not 15% increases. They can't handle it. But the fund managers need to start writing the calls out now, 15%, because remember, I see 1800. I don't have a crystal ball to tell me the time. It could be 3 more weeks. It could be 3 more days. I hope that it doesn't do it in the next 2 days, right? That it comes back a little bit. So that's where we could get hurt, right? Is this going to get back to 1280? There's no chance in hell it gets back to 1280. Could it retrace to 1350 or something? Yeah, in 2 days, that's a big ask. It could happen. I think that's a 1% out of 100% chance. And frankly, I'm happy that we have a gain. I just don't want to take a $22 million buyback here, right? And then waiting, because what would that do to our payments, right? So we got a 12 million gain. That's going to stay. And we've got a $20 million on paper, 22 million. So we could have a 34 million gain there. Well, last time we had that with less shares, right? That was like $4 and something. But, well, that was a loss, by the way, right? That wasn't a $32 million gain, but you see what the share amount caused, right? We had a net income of a $23 million loss, and that was 6. So at 32 million with 4 million shares, wow, that's like 7.5 of a win, right? But what happens if we take a $22 million, right? Now that takes away the 7, so all of a sudden this is 15, right? So now we're setting at a $3 a loss here, with a $4 loss there. So we just don't want to, this won't stay there. We just don't want to lose that badly. I'm okay. So let me give you my example loss. Let's go to the weekly. So here, this would be cool. Let's say we get back to 1350 from 1500 sometime during Friday, and they're able to go out and buy this position, right? This one right here. I've got it in holdings. So this 225 is because of where we are. At 1350, we could buy this back on Friday at 70, 71. Well, if you do the math, even at 75, 375s is 225. So we would only take 7 million loss on this, right? So 22 becomes 7. And then, you know, we would have a much less of a loss on this guy at 1350 as well. So that would probably be a 300,000 loss, right? And so the scenario can get a lot better with some pullback. And so what? Yes, on our synthetic at the 13, the paper loss would maybe be around 14 or 15. Sorry, the gain would only be 14 or 15. But paper doesn't impact payment until it does, right? The old saying, it doesn't until it does. So anyway, that's the best way I can explain it all to you. The yin and yang of the synthetics versus the weeklies. You want to, the weeklies were written as a safety net, but when you get aggressive and you have big runs and they're written early in the week and then from the previous week, then it hurts you, right? So the weeklies have a $22 million loss, but the synthetic has a 22 million gain. Look at this. Look where the synthetic, just last Friday, we had a $22 million paper loss, we had a $10 million paper loss in our synthetic. That's how much we've moved up, right? So we've moved up 32 million gain. So that's just fabulous. But 22 million of it's paper. So anyway, I'm optimistic. I think we'll have a couple dollar payout. I'm not quite as optimistic on the $3 and $4 because we could get really hurt. If we come back to 13.50, then I think there's a chance for 3 or 4. Because on the synthetic, they don't always roll it. They'll take it in mind when it comes to declaration. If we've got a $50 or $60 million paper, gain, they may loan us a little bit out of it that this is only $1 and pay us $2 or something. This scenario was interesting. We had a 241 on the paper, but we took a big loss here, right? That's why I think they're less likely to give us the benefit of the doubt. So we need to maybe put additional synthetic on it, like a 230, I'm thinking CONY. If we run to 1600, then maybe we need to put a 14 or 1500 synthetic and start writing there and keep 2 synthetics, right? Or close out 13 and move to 14, and then it puts a pile of money in here. So then they can pay us $2 or $3. Okay, I know that's a lot of detail, guys, but I wanted you to see that. So let's go and look at the chart that made all this happen. Right, I talked about the inverse head and shoulders. So also, when they show them, they always show the perfectly balanced one. I'd say 50% of inverse head and shoulders have a slanted top, a slanted neckline. So it's probably 1380 from 1400. It really doesn't matter. We broke through it. And the target would only change slightly. Add 380 from that and you're probably 1760 instead of 1800 on the slanted price, right? Because that's how you calculate it. You take the head and you measure the neckline, and that estimates the distance. Now, the pullbacks can happen, but here's where we are, guys and girls. So this is the slanted line. We broke out big time, right? And any pullback might be to this line. I doubt it, right? We're already showing we could blip up a little here to 1530 and close at 14. That would be awesome if you ask me. And then on Friday come down and close at 1350. I can't really ask for 1280. I don't see that happening. It all depends on what BTC does. BTC is clearly, for Mr., is leading the dance here. So that's what I got for you. I know I flew through this, and I'm trying to make up time for all of that previous recording that I was 90% done when my system crashed. So I know I kind of rushed. But positive on Misty and what I see where the price is going. we just got hurt on these weeklies, right? This synthetic is awesome. I see nothing but good things here about doing that. So we can collect some money by writing more synthetic. We need people to buy into the fund, and I want to buy in. So if it pulls back, I'll be all over Misty in the 30s or 29. Okay, guys, I think that's it. I'm sorry if I was a little disjointed. I think just the rush to get this all out, and it probably wasn't my best recording for you guys, but I think I communicated most of what I wanted to communicate. You can see the lost stuff here. And that's why they're dangerous. That's why these weeklies, when you run way past them. But I will get you guys some other Misty and CONY cheap ETFs that are, you know, bear or bullish, right? Because when you encounter a situation like this where you're capped, and if we were to keep running on the next 2 days, we're going to continue to be capped, right? We're going to be constrained by those calls losing money while this gains. So that's when you want to be able to own, you know, just an ETF that's 2 times Misty, or an ETF that you just go into it for a purpose and then get out. And when I say Misty, I really mean Mr., right? But, you know, who has $1,500 to buy this with any kind of significance? Okay, that's all I got. Again, this is Bruce signing out. I'm not a financial advisor. This is for fun and entertainment only. Have a great day ahead. See you guys. Bye.